General disclosure statement. This content is for informational and educational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained here constitutes a solicitation, recommendation, endorsement, or offer to buy or sell any securities or other financial instruments whatsoever by the author, presenter, or other associated parties for the content being provided. Please do your own due diligence and seek proper counsel. Thank you.
Hello and welcome to CapCity BTC, Sacramento's premier Bitcoin and cryptocurrency group, serving Northern California. Enjoy the presentation.
We're really excited for today's virtual meetup. We have a very special guest today with us, and we're going to be discussing some really important things in this industry. We'll be talking about how to invest, or what these strategies are to invest from a fund perspective in the often irrational crypto market, why tokenized securities are so important and they're groundbreaking, how regulations affect development in the blockchain industry, and more, with our special speaker of the evening. But before we get to that, please give it up for our moderator of this evening, our very own Sacramento's special regulatory and compliance expert, Joe Ciccolo. He is the founder and CEO of BitAML and is always willing to give some educational resources and some insights into how the compliance and regulatory space is moving along in the crypto space. So please give it up for Joe.
Thank you, Gibran. Thanks everybody for being here, and special thanks to Joshua for making tonight happen and giving his time to all of us. I know that there's a lot of interest and a lot of folks that have some great questions. And speaking of questions, if you do have questions along the way, whether you've thought of them now or think of them throughout the course of our banter back and forth, please share them in the comments or in the comment box there over to the side. And Gibran and some of the other members of the team will sift through those, and then we'll go chronologically or some other logical order towards the end of the presentation. And then we can have a sort of ask me anything, if you will, with Josh. But just a quick introduction about Josh's full bio is on the meetup page, so feel free to read in detail. I won't go line by line, but as Gibran mentioned, very proud to have Josh with us here today. Very accomplished background. He's currently the General Counsel and Chief Compliance Officer of Blockchain Capital, which I know is probably familiar to more than a bunch of you here on this call. Josh was an expert in legal issues, governing securities tokens, cryptocurrencies, decentralized networks, and the rapidly evolving crypto and blockchain space. Very strong legal and compliance background in the world of crypto and digital currencies. A little bit about Blockchain Capital for those who may have not heard of it until this presentation. Blockchain Capital's leading venture firm based in the Bay Area in the blockchain and crypto industry. Last 7 years, they've made over 90 investments, companies, protocols across the sector, across different stages, geographies, and asset types and categories. So we're very pleased to have Joshua here today with us. And I thought maybe we could just break the ice with some carefully scripted questions to kind of break in Josh nice and easy, and then we'll get to have plenty of time for all of your questions. And if at any time Josh has mentioned that he may not be able to answer certain questions for regulatory and other reasons, so we will certainly honor that on his end. So Josh, welcome. I think the best way to maybe break the ice is to tell your rabbit hole story. How did you get into the crypto and blockchain space? You know, what was that like?
Yeah, so for me, it was, you know, I missed the boat story. I was in law school, and this was around 2011, maybe a little bit earlier, and I heard about the Silk Road and I heard about Bitcoin, and it was interesting from a legal perspective. So I kind of like read the headlines, kind of maybe read a few paragraphs in, was like, oh, you know, somebody's actually kind of using a digital currency. You know, and in the back of my mind, it was like, you know, is this the future? And then I think I had like a brief do or something, and had to forget about kind of Bitcoin and the Silk Road. And I think maybe a couple months later, I saw, you know, the DOJ and the FBI and everybody kind of getting involved and it being a big thing. But unfortunately, never jumped in at that point, which would have been amazing if I had really kind of tried to see what this Bitcoin was all about. So I have you know, after missing that boat, kind of missing that exit, I had this kind of circuitous path to crypto, where I started out in private practice in New York City, working at a very big white shoe law firm. And funny enough, our banks, our primary clients were large banks. So I was working for a firm called Sherman Sterling, very old firm, very distinguished and legacied, and you know, the very kind of like stuffy old leather-bound halls of law firm. and didn't love it. It's a great firm and I learned a lot, but just, I was working across from the VP of such and such at, name one of the top 10 banks in the world. Just wasn't exactly what I wanted to do. And so I switched after a few years to a firm called Cooley. And at Cooley, I started doing venture capital as well as some kind of capital markets work. And it was at Cooley that I really rediscovered Bitcoin. And what was fascinating to me from a legal perspective was how we had this brand new asset class that didn't have an existing regulatory framework that it fit into kind of neat. And so a good buddy of mine, another lawyer, really was working in the space before in the payments, on the payment side of things, and kind of roped me in and said, hey, we could use some help on the capital market side of things because people are starting to sell tokens, predominantly tokens that have been created on the Ethereum network, ERC20 tokens, and we need help thinking about a framework for how you can do this the right way, or the way that at the time we felt was appropriate given that there's a different type of asset class. So some of you may know, Marco Santori was at Cooley at the time. He is now the chief legal officer at Kraken. He developed the SAFT white paper. And that's kind of where I cut my teeth on crypto was this legal theory that the investment contract was something that was distinguishable from the underlying asset. Now, today, that legal theory has been kind of shuffled up and potentially blown out of the water with the Telegram case. So it's interesting to see kind of what 3 or plus years has done to early legal theories in the space. But it was really that cutting edge, that newness, that there's nothing set here, there's nothing actually sacred here, that was really exciting for me to come in as a lawyer. And I think now, I haven't taken a survey, but I would guess that I have the most exciting job of all my lawyer friends, because I get to be in this like really, really new, really still forming industry, and I get to do it, both the legal work and and work on the investing side, which is really important to me. And so that's kind of how Bitcoin and crypto became really interesting to me. And now everything that I do and everything that we do at Blockchain Capital is really an effort to push the industry forward, because we believe that this technology is going to be paradigm shifting. We believe it's going to be groundbreaking, and it's going to change the way we do commerce, the way we do life, the way we think about money, the way we think about possessions, and the way we build things that allow us to interact with others in more efficient, more effective, less friction ways. We're still in the infancy of the industry, so there's a lot of work to do, but that's really what kind of like gets me up in the morning, is the opportunity to be part of that work.
That's fantastic. And I noticed you mentioned sort of a broad category of different assets and different companies you're investing in. I noticed there's a different suite of different types and investments you have. Can you walk through the thesis of Pearl and some of the categories you've invested in?
Yes. So we, I'll tell you a little bit about Blockchain Capital and then kind of lead into kind of what we're looking at, what we're investing in. So we've been around now for 2020 for 7 years. Like you said in the intro, and I see there's already a question about the SEC. Super excited to answer that. So we've been around for 7 years, and the industry has changed a lot over that time. Blockchain Capital was part of the very first ICO, Mastercoin. I think that was in 2014. They're one of the earliest investors in the Ethereum network. And then we also tokenized our own security, our own fund, and kind of disrupted ourselves because we saw that capital formation was happening via tokens. And if that is going to disrupt anyone, it's going to disrupt people who raise capital professionally, which are venture capitalists. So we did that. And today we have 5 funds, and we've got almost 400 million assets under management across those funds. And over time, our philosophy on the space, at least in the particulars, has shifted. I'd say early in kind of the 2014, 2015, we were interested in enterprise, we're interested in supply chain, we're interested in things that had a more kind of tangible use case for blockchains, and quickly realized that those weren't actually great use cases. Some, we have at least one portfolio company that is kind of using the technology well in that area. It's called Wave. They've done some great things. They're partnered with some of the larger shipping companies in the world. But by and large, the kind of the closed-end, private, permissioned space is not the one that we're super excited about. And so we shifted from that to in 2017, we were very interested in ICOs, very interested in use cases specifically for tokens, but on permissionless networks. And we did have some positions. Thankfully, we exited a lot of them in early 2018 before the kind of the market reverse. And part of that was, was taking some returns. Part of that was luck. Part of that was a little bit of reading the tea leaves of seeing that the SEC was going to start kind of picking their heads up and looking at some of these things. And so throughout that, there have been kind of these high peaks of different kind of types of applications. One thing that has really helped us stay grounded as investors and kind of thinking about our thesis is we still believe in the infrastructure of the space. Our most recent investments last year have been Anchorage, custodial company. We believe that they have an excellent technological basis for custody of digital assets. And we think that that is going to allow them to grow with the industry as it becomes something that is more palatable for institutional investors. So we see a prime brokerage stack building up in that kind of vertical of infrastructure. We also invest in a company called Bison Trails. Bison Trails does infrastructure as a service and helps deploy nodes for clients and helps them manage particularly assets that need to be staked on the network. We think that those are going to be really significant, particularly as networks become more diverse and more complicated. It's going to be harder to like run your own nodes on a diverse set of networks unless you're just really, really smart and really, really good at understanding all the different nuances of those things. So we think that that's going to be important. Just recently, I can't say the name, but we invested in a company that is assessing transactions in the mempool and aggregating data for how certain transactions get through to be confirmed in a block and how certain transactions don't. And we think that is going to be increasingly important, particularly as we've seen an explosion in DeFi over the last several months, a pretty steep rise in gas costs and cost of transactions, particularly when you think about institutional entrance into the space. It's going to be important for those types of users, institutions, those types of investors to be very confident that they can utilize the network and utilize assets on the network, transact in assets on any given kind of blockchain network in a way that feels secure and feels certain. So we think that all of those things, I talk a lot about infrastructure, and if others have heard me speak before, it's always something that comes up. But we still feel like we are in kind of the early to mid 90s of the internet. I'm sure you all remember kind of the first time you interacted with the internet. It was slow. It was kind of you weren't sure exactly what you used it for. It took a long time. It made noises, and all of those things were like the development in that space at that time was still building out the basic kind of user rails for the internet. And so that was it was 20 years before we really saw the fruits of all that labor, but that's when HTTP and HTTPS were being developed, and SMTP and SMS and TCP/IP, like all those rails, all those kind of like skeletal structures for what we now have today is a really excellent decentralized network for exchanging data globally. Those are all being developed then, and so we still think that there is a lot of work to do on the infrastructure side. And in some ways, being involved in the infrastructure side allows us to invest horizontally in the space. One thing that's important for investing is you need to be diversified. We are especially not diversified by being in crypto, right? We only invest in blockchain and blockchain related things. We do everything in blockchain. We do all verticals within blockchain if we believe that they are going to be successful. But blockchain is just one thing right now. We believe in the future that it'll touch many different aspects of society and many different aspects of the global economy. But right now it's a very niche area, and so within that, it's really important to be diversified. And so you can do that a number of ways. You can do that by like picking many different things and allocating a small amount of capital to those kind of disparate number of things. You can do that by allocating more capital to something that is going to affect lots of different areas of the industry. And so we think infrastructure is like that. particular bison trails. That's one way of kind of investing horizontally in layer one, right? Instead of saying like, I think, I think Cosmos is going to win the layer one race, or I think Polkadot is going to win the layer one race, or I think, no, I think it's going to be the Near protocol. Instead of having to kind of decide on the winner, the hope there is that we have the opportunity to pick someone who is going to benefit regardless of who wins, right? Where we benefit as well. So that's a very important part of our strategy and our philosophy. These days, we are taking a very close look at DeFi, and just before that, I will say we've always been very interested in security tokens. We love the theory is that security tokens allow democratization of ownership and then hopefully wealth. And there is already a regulatory path to being able to deploy security tokens, to hold them and to trade them. There's still some pieces that are missing that need to be filled in, but that's something that is consistently on our radar. Securitize is one of our larger investments, and they're doing a great job, we think, leading the security token industry, and finding new ways to be innovative about how we tokenize existing financial instruments, and allow those to operate more efficiently, to cut out expensive and bloated kind of middlemen like transfer agents and clearinghouses, other back office operations that are running on super old technology. You think about 40-year-old technology, or even earlier from the mid 70s. And a lot of these kind of rent seekers that sit in the middle of our capital markets transactions have been able to persist without evolving and without growing, because they own that process and they haven't needed to. So we think there's a lot of innovation that can be had there, and that our capital markets can benefit a lot from that. And then, as I mentioned, we're looking at DeFi. We think it's super interesting. In many ways, there are parallels between what's happening now and what happened in second half of 2017. I think there are important distinctions. 2017, there was just an explosion of the valuation of asset prices, and a lot of that was based purely on speculation, and it was speculation on assets that most of those assets were vaporware, or even if well-intentioned, didn't have direct use cases for the holder to employ. What we're seeing now in DeFi is we're seeing a bit of a reversal on the token issuance kind of model. We're seeing an operating platform that has a product that at least some people want to use, and that's kind of namely lending. And then the kind of the compensatory aspect of putting that capital to work is doled out in a token. And then that token, in theory, gives the holder access to the governance of the space, and the governance can then kind of redistribute fees from that ecosystem back to the token holders, in theory. So it's not for sure that it's working yet, but people are using the products, and so we're very interested. We think there are problems, and so we're cautious for sure, but we think that is going to be an important part of the ecosystem. We still love Bitcoin. We still believe in it. We still think it is the best used digital asset that exists today. And we think it has the best use case so far in terms of being a store of value. We think it is kind of the original decentralized finance, but we really appreciate the ability to, what we call DeFi now is like programmable finance, where you can remove centralized intermediaries and still accomplish a lot of the same goals. So yeah, that, long answer, a lot in there, but we try to take a broad view of the industry as best we can, and be really open to how things can shift and become important, even if they weren't, 12 months ago.
Yeah, no, I appreciate the broad view and the fact that you have different areas of coverage within your thesis, and that your thesis has evolved to match the realities of the marketplace and regulators, which I promise we'll talk about regulation later on. Or I shouldn't say I promise, I threaten that we talk about regulators later on. So no, what is maybe a more underexplored area that you'd like to see more entrepreneurial efforts within the crypto space? Maybe asked a different way, what great company is no one creating in the crypto space?
That's a great question. I'm not sure I have a really good answer for that. Everything that we're interested in, I think we're seeing kind of interesting companies building interesting things. And I always like to say, look, like we make mistakes, we overlook things. I think we have a great portfolio. We're very proud of it. We're as proud of the things that aren't in our portfolio in many cases as what is in our portfolio, but we also had misses. And so it's very possible that, there are things that are happening in the industry that, we are less kind of aware of. One thing that does come to mind, one area that we would love to see, there is innovation happening, and I don't want to offend anyone. So if anyone's listening or if anyone's like watching this later, like, please don't take this the wrong way. We recognize that people are doing work in all these various areas, but identity is still something that we don't feel like has been cracked. If you feel like you've cracked it, like, that's awesome. Let me know. Like, I'd love to talk to you. I don't want to kind of declare that it hasn't happened yet. But we just haven't seen solutions that we're super excited about. People are doing some really interesting things with it, but it's just such a hard topic. But it's also so foundational, kind of so core to having a decentralized, trustless, permissionless, global network of interactions, right, of transactions between people. On the one hand, you really want those to have some semblance of privacy and pseudonymy, but on the other hand, you would like kind of really concrete ways to solve the identity problem. Because the way we have solved it in life is really just like your government gives you an identifying number, and everything that kind of requires identity has to kind of rotate through that in some way, or at least touch that in some way. It's hard to do that without that kind of centralized infrastructure. So that's one that comes to mind is I'd love to see kind of more on identity. The other problem is, like, not everything is financeable. So sometimes we see teams that are building some really cool things, and we're like, we want you to be successful, but this is not something that we can finance because there's no kind of immediate kind of business model. There's no immediate plan to recoup any kind of invested time, invested resources, invested money. In a perfect world, we'd be able to finance those things. And from time to time, we can find creative ways to help finance those things, but we also have obligations to our limited partners who have given us money to then invest for them. And so we have to make sure that we're being very effective and efficient with our capital. So that's one thing. There's probably others, but identity is still kind of a really difficult nut to crack.
Sure, and we had some questions in there, and I know that your background includes, among other things, specialization when it comes to tokens and securities. Can you maybe talk about the regulatory history centered around the SEC, of course, with respect to tokens and ICOs, and kind of fast forward through today? Where have we been and where are we going? Strictly speaking, on the securities regulatory piece.
Sure. So kind of broadly speaking, the SEC kind of was aware of Bitcoin, but decided not to really do anything until not kind of take no positive action with respect to the asset class itself, particularly until the Dow report in mid 2017. So that's kind of our BCAD, or like our BCE kind of moment. It was like everything before that was kind of this like amorphous Wild Wild West, and everything after that, in terms of securities regulation, has taken on a more intentional role, we'll say, or a more intentional kind of shape. So what we've seen is that the SEC has kind of slowly been building a case against, in particular, token issuance for the industry over the last 3 years. And I specify token issuance because it is, this is my personal thesis, we were talking before we formally got started about disclaimers and whatnot. So this is not legal advice. This is not investment advice. But this also doesn't reflect kind of any official position of blockchain capital. But it's my interpretation of such. But my views on the SEC are that it is much more difficult for the SEC to declare that any particular asset is a security in kind of the digital asset world. Not that it can't, or that it hasn't. It has, particularly in the case of Paragon and I can't remember the name of the one that came out kind of around that time, but they were kind of able to say, look, all of these things that are floating out there in the wild, those are securities, and you need to register them. Largely, I think that those efforts have been kind of catastrophic failures, because it's just not I don't think it's practically possible to do. Like, it's just not something that you can actually do. in kind of the like physical implementation sense of the word. Register securities, or register as securities digital assets that are floating on the wild. And I think after Paragon and a couple others, I see kind of realized like all the different administrative impracticalities of having issuers do that. They kind of realized that what those were. And so they've had to change their strategy a bit. And so what we've seen, and I guess if I had to kind of underline my thesis, that thesis with an example, it would be EOS, where the SEC basically said, hey, EOS, you did a bad thing by selling investment contracts. And so what we're going to do is we're going to give you a big fine and tell you not to sell investment contracts without registering them as securities. What the SEC didn't do to EOS was they didn't say, hey, you have to register as securities all the EOS that's out floating either. And I think that was kind of unofficially the reason why they did that was because they couldn't. There's just no way that they could actually force EOS to do that. It had become so widespread. They had circulated so much. It was such a big kind of network that there was really no practical way to force them to do that. And that, coupled with EOS had excellent legal representation that really kind of I think won the day for them. So that was another part of it. But I think what they realized is, look, like the way we attack these things is we attack the way that they are sold, the way that they are issued into the market. And I don't want to go into the Howey test unless people really want me to go into the Howey test. But the idea around the Howey test is that it defines an investment contract. An investment contract is a security, but it's a security for different reasons than, for example, the reasons why equity of a company is a security, or why debt of a company is a security. Those things, equity and debt, are securities by definition. The SEC and Congress has kind of looked at those things, just kind of pointed and said, these things, we name them as securities, and they're securities by merit of the fact that we have named them as such. An investment contract is not a security by merit of it being named as such, because nobody knows what an investment contract is, like no regular person, right? But what we do have is we have the Howey test that says this is what an investment contract is, and this thing is a security. And so the reason why that is important is because what an investment contract is it's a manner of offering something to someone that by all the kind of different elements that are involved in that offer, they implicate a security, which at the core is you kind of offer something to someone where if they invest money with you, they expect to make a profit from that investment, and they expect that profit comes because you are doing something special in that vein. And so it's much easier for the SEC to label something an investment contract that looks like a SAFT. It's harder for and the practitioners in the industry believe that SAFTs are investment contracts. So we all agree on that. It's harder for the SEC to look at something that exists in the wild, like Ethereum, Ether, to be more precise, right? Like the ETH tokens that already exist in the wild, that people hold, that people use, that people exchange. It's hard for them to say that is a security. Now, technically, under legal theory, they may be able to, but it's just a harder thing to practically get at. So instead of doing that, what they've done is they've said, look, we really want to prevent people from getting from 0 to 1 the way ETH did, right? We want to prevent people from launching networks that way, and that's what we saw in Telegram, right? We saw Telegram kind of on the eve of them distributing tokens to their purchasers. We saw them get hit with a temporary restraining order by the SEC. And I think, and it was shocking to me because this happened a month or so after the EOS settlement, which to me basically indicated that these tokens are different from the way they're sold, the investment contract. But I think largely the SEC realized, look, we can't allow widespread distribution of these tokens because it prevents us from being able to control them after that happens.
So, John, real quick, what about tokens? Like, there's so many new tokens that are being uploaded to Uniswap.
Yeah.
And that's kind of the new way of getting a new token out, is just provide liquidity onto Uniswap. But now it's like, okay, how do you control that? Like,
right.
It's DeFi.
Yeah, that's a great question. Yeah, I saw that pop up. There's multiple answers that I could give to that, right? The regulator's answer will be those are likely securities. So if you're just like dropping an asset into something like Uniswap and people are buying it, they are buying it because they expect that it's going to go up, and they expect the value of it to increase, and they expect the value of it to increase because you've created it in such a way that is going to give it value over time. And perhaps they believe that you're going to have ongoing involvement with that. Now, the ability for the SEC to go in and shut something like Uniswap down is much harder than it is for the SEC to go in and shut Paragon down, or what's the other one? Airfox? Was it Airfox? I think it was Airfox, right? Like those have like centralized issuers who promised a decentralized ecosystem, but really didn't have one when they sold tokens. What we're seeing a lot of in DeFi, which is the interesting piece from at least from a securities regulatory perspective, is that if you can credibly decentralize the governance of these protocols, then it becomes much more difficult for a securities regulator, whether it be the SEC or anyone else, to go to the kind of the token creator who's really just written a protocol that distributes tokens to people who are locking up liquidity on the protocol. It's hard for them to go to that person and say, hey, you sold an investment contract. They could say, look, people are investing money because they're locking up liquidity, they're locking up assets, even if they expect to get those assets back because it's a lending protocol. And it's easy for them to say that there's an expectation of profit because they're certainly expecting to get some yield from that. But it's harder for them to say that it's based on the expectation of others if the people who determine the parameters of that protocol, the governance token holders, if they are not kind of one particular entity, right? So the more decentralized those government protocols can be, the harder it is for the SEC to attack that type of protocol. Now, the SEC is very wily, and they've got strategies, and they're very crafty. One thing I tell people all the time: that the SEC doesn't play fair. Is not a disparagement to the SEC. I think that I don't think they're doing anything illegal, but I think that they're not, when they come knocking at your door, they're not trying to help you, right? They're trying to take advantage of every opportunity that they have to, help their case. And largely they are kind of guard dogs, and they're built to find violations. So, is anybody from the SEC here? I feel like I would have recognized you, but I think that the bottom line there is the SEC is going to have creative ways to come at DeFi, and one of those ways is, look, if they can say that, for example, not to pick on Compound, but just because they're the most known, but if the comp token in SEC's mind is a security, then people who are doing things with the comp token, like exchanging it, like listing it, those people need to be broker dealers. They have to be a regulated entity with the SEC. Now, the way the industry is trying to get around that is to have decentralized exchanges and decentralized exchange aggregators and decentralized protocols that help people find yield. And so what you get to this question of, to what extent are you liable for creating something that kind of does a securities regulated activity, but it itself is not a traditional entity that the SEC would penalize for doing that. The SEC can kind of penalize creators, and they have, right? If you think about the Ether Delta case, Ether Delta is supposed to be a DEX, and the SEC said, look, like, you created this DEX and you allowed people to violate securities laws. I think there's some things that if you look at Ether Delta and say, like, okay, I'm not going to do A, B, C, D, and E that the founder of Ether Delta did. I think there are ways that you can get around that. But nothing is proven, right?
That's very interesting. Yeah, we have a lot of questions around the securities, and I think maybe one of the themes, if I can extrapolate from that, is, do we see the SEC maybe either evolving its stance or kind of moving away from the orange grove, as it were, with the Howey test, and maybe getting into things that are more progressive in terms of maybe putting different buckets and categories for tokens, or being more open-minded, a la Hester Peirce. In stark comparison to her colleagues. Yeah, I think she's on an island, unfortunately, but perhaps, one vocal person in the minority may, in time, shift the majority. What are your thoughts on that sort of broader set of questions and where we're going on the security side?
Yeah, for sure. No, it's a great question. Look, we are as invested and interested in what is going to happen in the SEC over the next 5 years as anyone. And that is a kind of a huge part of my job. And I complain a lot about the SEC and them not giving clear guidance and, not taking reasonable positions on things, in my opinion. But that's, the SEC kind of doing all those things is probably why I have a job, so I can't complain too much. But, the truth of the matter is Hester Peirce has a pretty radical view of the industry compared to most other kind of legal commentators in the securities regulatory space. That's not to say that her view is unreasonable. I think it's actually really reasonable. And I think that it is actually a really necessary kind of counter view to the prevailing kind of consumer protection practice of the regulator. The problem is that she, like you said, she's in a very small minority in that view. On the other hand, she's in a pretty powerful position to hold that view. What I think is interesting about the SEC and its leadership is that it's pretty clear that Jay Clayton is on his way out. I think when he came to the SEC in 2017, not because no one's pushing him out. He's on his way out because he wants to leave. I think that's pretty obvious. And when he came in 2017, I mean, Jay Clayton's a New York guy. He was a big time kind of white shoe lawyer at Sullivan and Cromwell, which is kind of like, the most storied law firm in the country, or among the most storied. But he's a big New York guy. His family, I think, is still mostly in New York. And when he started his tenure, it was always kind of like hey, I'm going to do this because I believe in capital markets and I believe in protecting investors and particular retail investors. And I think there's a lot of things to do here. And he's done a lot of things in his tenure, but I think it was always caveated with that he was going to want to be back in New York before his full term was up. I think that was kind of always unspoken, but understood. And so again, that's kind of what I've heard and kind of my opinion, my read of the situation. So don't take that as gospel, but what we did see is a couple months ago now, I think, there was this controversy with Trump having the U.S. attorney in the Southern District of New York resign. And what came out in later congressional hearings with Jay Clayton was that he wanted that role, and it was probable that he was going to be appointed by Trump to take over. And so Congress had a field day with this, and you had a bunch of particularly liberal congressmen and congresswomen really holding Clayton's feet to the fire and saying why are you doing this? Can you commit to staying? Can you commit to fulfilling your role at the SEC? We need you there, and blah blah blah. So it was really comical. I don't think that's going to happen. It might happen. Honestly, I prefer if it happened, even though I'm not sure that Clayton is kind of a prototypical U.S. attorney for the Southern District. He's not a prosecutorial attorney. He's really more of a civil guy, and the U.S. attorney for the Southern District is like if you watch Billions, that's like your Paul Giamatti. It's like the guy who goes after the criminals and puts people in handcuffs. And the SEC doesn't have windbreaker. I mean, they probably have windbreaker jackets, but those aren't the windbreakers that you're scared of. The SEC doesn't have handcuffs. They don't have firearms. You're not going to jail if you mess with the SEC. You're going to jail if you mess with the DOJ, if you mess with the Southern District of New York. So, but what I think is probably the case, it's probably the case that Clayton leaves in the next 6 months, probably before the new administration, regardless of whether kind of Trump is reelected or it's Biden or someone else. But I think he probably wants to move on. And what's interesting is that if he does, kind of the most senior commissioner would be Commissioner Peirce. Now, if it's Biden, it's unlikely that she kind of be appointed as the interim. If it's Trump, it's maybe more likely. Not that it couldn't happen if it were Biden, but there's another commissioner, Commissioner Roisman, who is also pretty reasonable, I think, when it comes to crypto. And I've spoken to him, and I've spoken to his deputies a number of times, and I think his perspective is much closer aligned to Hester's than the other former commissioners. We've also got 2 new commissioners that are coming on, and so there is some kind of new blood on the commission. And I think if we are in a situation like say Clayton leaves, a month from now or 2 months from now, it's possible that Hester then becomes the acting chairwoman of the commission, and then maybe she has some freedom to implement some different perspectives at the SEC. She was very vocal about the fact that she disagreed with the Telegram case. She disagreed with the Telegram enforcement. And she disagreed with the judge's opinion, the federal judge's opinion, the Southern District of New York federal judge's opinion. That's in a speech that's called Break and Breaking or something like that. But she essentially, it was a very bizarre thing to do, but she used that speech is like a dissent to the entire Telegram enforcement action. I thought it was brilliant, and I loved it. But that's kind of something you might see if she's given more of a head role at the SEC. I'm hopeful that she gets a shot at it. But even more than that, I'm hopeful that whoever replaces Jay will be someone who is more open-minded, because the truth of the matter is that if there is good regulation, this industry can really change a lot of things for the better. And we in the industry are not anti-regulation. There's plenty of people who are in the industry. There's plenty of, you're kind of like early. Yeah, I mean, a lot of the ideals of the industry are like no government, no rules, no laws, and that's fine. Like I don't begrudge anyone that. That is not the majority of the industry. That's just not what it is anymore. And I think when you are in our position where we have to sit in front of multi-billion-dollar corporations and huge family offices and huge fund of funds, like those people aren't interested in the like anarchist, like hyper-libertarian narrative. They're just not. And that doesn't mean that we don't sympathize with some of those things, but there needs to be, in order for this industry to grow, there needs to be adoption at that level. In order for there to be adoption at that level, there needs to be sensible regulatory pathways. And so that's what we want. We want an open dialogue, and we want regulators to be able to change, which is not a kind of a regulator's strong suit. And so it becomes difficult for them. But I'm hopeful that the next half decade we can see more of it.
Awesome. Yeah, in the interest of time, there's been some amazing questions I can't wait to get to. So I'm going to combine my last two questions for you together, and then folks keep those questions coming in the chat box here. So Josh, let me let you out on this. So what's your perspective in what Brian Brooks has put forward on behalf of the OCC with respect to banks now custodian, or now have confirmation they can custodian crypto assets, and maybe what does that sort of tell us, if at all, anything about regulators and policymakers inside the Beltway? Want to get your thoughts on that, and then we'll go to Jabron with some questions.
Yeah, I'll try to be brief on this one. But look, if you would ever wanted like a favorite regulator, well, I guess it'd probably be Hester. But if you want a second favorite regulator, Brian Brooks is your guy. Like, you need to go look at him. He is a straight gangster, and what he did with this interpretive guidance was brilliant. So Brian Brooks was formerly the chief legal officer at Coinbase. Coinbase is one of our portfolio companies. Brian Brooks and I and one of the partners at Blockchain Capital, Bart, has spent a lot of time talking about policy and regulatory strategy, and particularly when he was at Coinbase, I had the privilege of being able to kind of spend a lot of face time with him and see some of the inner workings. He's a master strategist. And I think what he is doing at the OCC is really amazing. It's really brilliant. I think he is one of the ones who gets it, kind of along with Hester and along with Giancarlo, the former chairman of the CFTC, who now is working on a digital dollar think tank. But he gets it, and he sees kind of the opportunities to really benefit our financial system. And so what he did, just for anyone who wasn't aware of what happened, but what he did essentially was say, he is now the acting comptroller of the currency. So he's the top bank regulator. And what he did was he issued interpretive guidance to say that the banks are able to custody digital assets. But not only that, are they able to custody digital assets? So what he said was, banks have always been able to custody digital assets. This isn't new. I'm not saying anything that is that's kind of new thoughts or new formulations. I'm just looking at what exists in the bank regulations, and when I look at it, it says that banks can custody anything. They can custody an asset, and they can custody an asset that's digitized. They can custody digital assets. He basically said, look, if your bank can hold your private keys in a private deposit box, in a security deposit box, that means that they can custody your Bitcoin. And so that was brilliant, because what it did was interpretive guidance. This is a bit nuanced, for you legal nerds. If you're not a legal nerd, just feel free to tune me out. But the interpretive guidance is not kind of official rulemaking. It's kind of statements that a regulator can make to say, like, when we read the regulations, this is how we read them, and this is how we interpret them, and this is how you should think about them. They're not challengeable in court. People can't kind of like sue the regulator against that interpretive guidance, or at least not easily. They don't have to kind of present. A lot of times when a regulator makes new rules, what they have to do is, or every time they make new rules, what they have to do is they have to say, hey, here are the rules we're going to make. and they have to give those rules to the public and allow the public to comment on those rules. And oftentimes they have to allow kind of Congress to see the rules and comment on them. And oftentimes, if they want to make rules that people don't like, usually not the public, but usually like other people in power, like people in Congress or other regulators, those rules can often get quashed at that regulatory step, that rulemaking step. Interpretive guidance is not susceptible to any of that. And so for him to look at the existing regulations and say, these existing regulations already allow banks to do this, was just a phenomenal strategic move. And has basically allowed him to get banks, national banks, to where he would like them to be with respect to digital assets without having to ask anybody's permission. Maybe he has to ask somebody, some people for forgiveness, but the cat is out of the bag right now. So I love it. I think it's great. I think it's excellent for the industry. Particularly what I like about it is that banks don't want to custody your digital assets because they don't know how and they don't understand the industry. But what they will want to do is they will want to buy someone who already understands how to custody your digital assets. And so, again, that goes back to our, we like infrastructure, we like custodians, we're invested in Coinbase, we're invested in BitGo, we're invested in Anchorage. We think there are excellent opportunities for banks to say, hey, I'd like to be in this industry. I don't have the hard skills to be in it. But I've got a lot of money, and so I'm going to buy someone who has the hard skills to be in it and allow me to play in this industry. So I'm hopeful that happens, and if that happens, I mean, that's a great bridge to kind of get the largest institutional players in the world to have a direct connection to the crypto space, and that's kind of the next frontier in terms of the industry growing, or one of the next frontiers in the industry growing.
So awesome. That's a great jump off point for Q&A. I like the high note we closed on.
Hey, Joe,
I
have a question branching off of that. One of the banks I've talked to said that they basically won't ever touch crypto until there's further regulation. So do you think that's going to be groundwork to get additional regulation going on, or do you think banks will just start buying up companies? I mean,
I think it's a great question. I think it's easy for a bank to say, I'm never going to touch crypto until there's more regulation. First of all, that statement doesn't, I'm trying to think about it, but I don't think it means anything. What do you mean until there's more regulation? There's potentially 15 regulators that could regulate crypto in some way. So are you waiting for all of them to say that crypto's okay? Are you waiting for they need to be waiting for something specific?
I think they're waiting for guidelines on how they should approach it and what they're supposed to do with it, because they have just no clue. Yeah.
That's a great point. And that is something that Brian mentioned, or that the interpretive guidance from the comptroller's office mentioned, is that look, banks can custody crypto, but they have to be competent. They basically, it basically said banks can custody anything they want to as long as they understand how to custody it, and they can do it well. Now, look, I think there's certainly some banks who are going to be reticent to jump into the industry. I think there are others that are already kind of champing at the bit to get in. If you think about JP Morgan, if you think about Citibank, if you think about not necessarily banks, but large payment companies, right? You think about PayPal, you think about Visa. PayPal's already it's been publicly noted that they are looking into the industry very closely, particularly on the stablecoin side. When you think about large players in the space, those banks are going to feel comfortable enough to find a way to be involved in the industry. I think the best way for them to do that is to get somebody smarter than them who understands the industry, or maybe not smarter than them, but smarter in crypto than them, and get them to do it for them. So I think the acquisition opportunities are high. I agree with that bank that they're not going to have their own, they're not going to go hire engineers. They don't know what they're looking for. They don't know who's good or who's not.
Well, now you have a Avanti up in Wyoming trying to establish a bank, a Bitcoin bank. They're working on their charter right now. I mean, do you think there's going to be a race for bank charters in the crypto space trying to get their charter, or do you think just banks are going to gobble up exchanges and whatnot?
Yeah, I mean, it's a great question. Avanti is also a portfolio company of ours. I love Caitlin Long. I love what they're doing. Avanti has a really, really special kind of spot in the kind of the banking space. And the reason for that is banks. So banks, the regulator of the banks is for non-OCC banks. So there are different types of banks. There are kind of three regulators for the banks. There's the OCC, there's the Fed, and then there's a local your state bank regulator. There's also the FDIC. So the FDIC is very concerned about how some of these banks would get into this industry. they would not want the banks to be able to issue stablecoins unless, and now we're talking specifically about stablecoins, but still custodying kind of digital assets, but they would not want banks to get into stablecoin issuance unless they could kind of real-time settle with the Fed. And so what we're actually talking about here is the ability to, when a transaction happens on the blockchain, the stablecoin issuer can settle that transaction with its federal regulator at the Fed, which the Fed kind of provides all the like money for the banks. So this is also like super nuanced, kind of legal geeking out. But what that means is that Avanti is maybe one of the few banks that can settle directly with the Fed because of the structure that they have available to them in Wyoming. Now, they haven't gotten their charter yet. We hope that they get it. They expect to get it. So a lot of this is up in the air. But we think that regardless, big banks are going to want to utilize other entities to be able to custody digital assets and potentially be able to issue digital assets in the form of stablecoins. And what we think is likely is that there could be a scenario where each bank kind of has its own version of the stablecoin, and kind of the way banks used to issue certificates of deposit back in the day, where they were redeemable against the assets of that bank. There's a scenario where that happens with digital assets as well, and particularly stablecoins. So yeah, we'll see. Who knows? I think Avanti is really well positioned, and we're hopeful that there are other entities that understand the tech and can handle it, that will be appealing to larger banks.
So far, this has been awesome. I've been learning a lot. I think we've all been learning a lot. But while we've been doing this discussion, there have been questions piling up in the chat. And so for the sake of time, we'll do kind of a lightning round. So we'll go through some questions that have been piling up in the chat, and we'll see how many we can get through. I mean, if you enjoy one like a lot, then definitely talk about it. But we're going to see if we can try to get through all of these.
Yeah, I'll be as quick as I can.
Awesome. So somebody asks more about how how you guys operate the firm. How many pitches does Blockchain Capital get a week, and how many of those pitches are just vaporware?
Look, a week, it's we review like probably 1,000 pitches a year. So whatever 1,000 is divided by 52. You guys are better at math than I am, but it's a lot. Look, we look at a lot of pitches, and I say, look, we look at 1,000 pitches a year. We've been around for 7 years, 7,000 pitches. We've got 90 portfolio companies. So we say no a lot, and we say no a lot to really great companies, really great opportunities. I'd say 80% of them are kind of just off the bat not interesting, and probably half of those, so maybe 40%, are just straight like one time I saw this thing for vegan coin, which is like an ICO for vegans around the world, and they wanted to use, I don't know, it was terrible. But sorry if you were involved in vegan coin, but it seemed like it didn't mean anything.
Awesome. I mean, I think I've seen a few projects kind of similar like that. I don't know what the goals are there, but anyway, there is a question. Actually, this one was for me, so I'm a little biased here. But what are 2 things that will help tokenized securities become the norm?
So the first is institutional adoption, right? Institutions, I think, are kind of like conceptually interested in security tokens, but they don't want to manage them, and they don't want to handle them. And so what we need to do is we need to build out, we need to continue building out infrastructure. Lots of companies are doing this. Our portfolio company Securitize, they are a transfer agent as well. And so they're being able to provide some additional structure to institutions. TokenSoft is doing some stuff. Harbor was doing some things, and they were just recently purchased. Templum, another portfolio company of ours, is really focused on the institutional side of things and kind of the tokenized security space. So I think that's the main thing. The second thing is there's still some technological development that needs to be able to happen to where we can really seamlessly integrate existing markets, say for like certificates of deposit or commercial paper, not certificates of deposit, commercial paper, where we have some like really nuanced markets that where assets are transacted among large institutions. that most of us kind of don't really have any access to. Most of us kind of retail kids don't have any access to. So I think there's still some kind of like technological development that needs to be done to be able to implement those systems, and a lot of those companies are working towards those things.
By the way, guys, while we're doing this, if you have a question that comes up, throw it in the chat, and we'll try to get to it. Also, if you'd like to ask a question over audio in person, virtually, click the reactions button in the bottom toolbar and just click the clap or the thumbs up icon, and I'll see it, and we'll make sure that you can ask your question over the audio. Next question is, we were talking a little bit about diversifying across the blockchain space. Do you have a personal favorite project when it comes to DeFi, identity, health, etc.?
Favorite project in DeFi. So yeah, so our favorite project in DeFi is probably Nexus Mutual. So one thing that I think is pretty overlooked in the DeFi space is insurance. Nexus Mutual is an insurance play in DeFi that really has kind of opportunity for broader implications in the world if the space grows. I think the way that they have thought about being able to create a mutual where the community values risk and the community is responsible for assessing if those risks are realized. I think that's really interesting, and I think that has been kind of one of the most interesting use cases that we've seen for decentralized networks, particularly DeFi. So really like Nexus Mutual, really interested in other kind of insurance protocols, and I think they're flying under the radar. It's not your balancer, it's not your curve, it's not it's not Compound or Aave, but I think like it is a really important piece of the ecosystem. It's really needed, and so hopefully that'll be an important part going forward. I'd say kind of the other ones that I mentioned in the other areas, so like infrastructure as a service. We think Bison Trails team is amazing. We love those guys. We think that Anchorage is really great for custody. Trying to think of anyone else. Any other kind of sector that you had in mind?
So, I mean, personally, from my perspective, I was wondering if you guys have looked at the geospatial or location services space. Someone else mentioned the future of title and escrow for real estate.
Mm-hmm. Yeah, I'm to be honest, I'm not super familiar with that space. So title and escrow is interesting. Has always been kind of an interesting application for blockchains. I think it's great, and I think it's something that will be kind of a natural outflow of the proliferation of the industry. I think for us, it's hard to see how it's monetizable on a venture scale, right? So like there are lots of people that are building things that are great, and there are lots of things that aren't great that will be like really good businesses. If you have a business and you are kind of making you're making like 50% profit over your 50% of your revenue is profit, that's really good business, but that's not like a venture or investable project for us. So you might do really well for yourself and it might be great, but like our like LPs aren't like, hey, go find me like a 50% ROI, right? So we're the things that we're looking at are really big bets, right? Really big swings. And so that's why sometimes they're really interesting projects. They're doing things that I think are great and super necessary for the industry, but we might not just be able to get behind them.
David also mentioned at the end there, there's also supply chain management, logistics.
Yeah, logistics. I mean, our portfolio company Wave is really interesting piece of that. Look, I think it's there's two things. I think again, like a natural outflow of blockchain technology will be to help supply chains be better. But when you think about supply chains, like you are often thinking about, even if it's a large network, it is largely a private network, or it's kind of an insular community of people that are involved in that blockchain. And so the benefits of having kind of an open, decentralized, permissionless system aren't realized in that context. There are other benefits, immutability and kind of the kind of the fact that each node views all transactions. Like I think those are benefits. But the other thing that is difficult, I mean, when you talk about like IBM putting tomatoes on the blockchain, like that is not true. Like there aren't tomatoes on the blockchain. Now that doesn't mean they're not tracking kind of like crates of tomatoes, but like they're just like putting an RFID tag on like a crate and like scanning it and keeping record of that. So like a lot of times these supply chain blockchains are really like glorified databases or Excel spreadsheets, which is fine. But I think that as blockchain technology grows, there's going to be more effective implementations of it. But I'm not convinced that like that is the most exciting thing that's happening in enterprise blockchain today. I think that over time, like, yeah, it won't be surprising for us that like we use blockchains to track goods, and we'll be able to build technology that is better able. I mean, I've even seen things that can like scan physical objects and can take the imprint of that object and like hash it and make a digital representation of it. And then when that object gets somewhere else, you can verify if that is the object itself. And so that's really cool. And I think we'll see more of that. I just don't know if it's going to be, an explosive growth sector.
I like that answer. That covered up. I think the best thing for us here is like we often don't have a direct plug into seeing the entire landscape. I think people like you have this unique view of being able to see many different operations from like the top, and that gives us like a really unique perspective on what's going on. Which brings us to another question in the chat, which is, what is your assessment or sentiment on other blockchain venture funds, maybe outside the US?
There are lots of good venture funds in the space. In general, we get along with most of them, even if we're like competitors. Our thesis, look, we wouldn't be in this industry. I certainly wouldn't have like staked my career to digital assets and crypto unless we believe that like the growth here is going to be enough for everyone to really benefit and participate. So, there are a lot of great VCs out there. There are particularly a lot of great ones overseas. One kind of particular area where there's some really great VC talent that kind of eclipses ours just because we don't have as much access to the region is in Asia. So there's some great VCs in Asia that really understand kind of development that's happening there and kind of have a view on the ground of new protocols, new dev teams, new use cases, things that people are using, and ways that Asian communities in particular are engaging with the technology. We've done some things in Asia, and we have good connections with those, with some of those VCs and some other kind of contacts on the ground. But yeah, it's just, it's hard if you're not in, Beijing every single day, if you're not in Seoul, if you're not in Tokyo, it's, you don't have as clear a picture of what's happening there. So, but we're friendly with a lot of the VCs that are doing other cool things in other regions and collaborate whenever we get the opportunity to.
There's a question here about stablecoins, and I'm actually pretty curious about this. Is I know we had that Facebook stablecoin fiasco, but what is your perspective on stablecoins and what kind of regulatory pushback we'll see on the emergence or the attempt for creating stablecoins?
Yeah, that's a great question. 2 years ago, or even 18 to 12 months ago, I, admittedly would have said that stablecoins are pretty boring. I would have been like, look, like you're just making a digital representation of a dollar, and great. Like, yeah, it's like a fiat on ramp, and that's cool. And like, hopefully people use it. It's pretty dominated by kind of one stablecoin issuer, Tether. I don't have any kind of particular issues with that, but it's just like very centralized there in the space. And then you had USDC from Center and Coinbase, or I guess Center Foundation backed by a certain Coinbase. And again, interesting, and it's a great way to allow people and institutions to come into and out and exit out of the kind of the digital world and back into dollar world. Today, I think is way more exciting. We are seeing customized stablecoins, customized stablecoin services from issuers like Paxos. Center, of course, is gonna be looking at that. And we're seeing behemoth payments companies really be interested in what a world with kind of a particular stablecoin service that they can kind of adopt and make their own, what a world like that looks like. And so I think like before, where it was just kind of like, yeah, it's rails into the industry, but it's not particularly exciting. It's now become like, no, this is actually a great way for legacy financial institutions to really start to go digital in a blockchain-based digital way. and really have the opportunity to interact with crypto in a way that's familiar to them. And so that's been really fascinating to watch over the last kind of 12 months, 12 to 18 months. And we think that a lot of the institutional growth is going to come from really specialized stablecoin services. Now, what I think is going to be interesting is not like, this stablecoin over that stablecoin, or that stablecoin is growing and this stablecoin is not. I think it's happening, and that will continue to happen. I think Tether's going to continue to be pretty dominant. I think USDC is going to grow. There may be some others that do. But I think what will be interesting is we'll see companies like Paxos will even, and you call it like, the Facebook fiasco. I think that Libra has the fiasco of it, I think, was that the federal government was concerned that having a basket of currencies created to back a digital currency from a Facebook entity that has access to so many people around the world would begin to undermine the sovereignty of the dollar. Now that Libra has basically said, look, we're not going to do that, it's going to be a dollar stablecoin, I don't think people are going to care when they do this anymore. They're going to have to be regulated, and they're going to have to play nice with regulators, but I think they will continue to do that. And I think what's going to be interesting is that now that central banks are particularly interested in the question of digital currency and whether they should implement it like China's doing, what they're going to be looking for is they're going to be looking for service providers who can say, hey, I can digitize your currency for you, and I can introduce your currency into this new world without you having to formally do that, because the Fed does not want to digitize the dollar, but they're happy if someone else can do it. I think that they would be happy if someone else to do it, and that's where someone like Libra or Paxos or something else becomes really interesting, not just to other companies, but now to like global reserve currency is, primary, which is the US, but you also think of opportunities overseas in Europe, where there's interest there in the digital currency, but certainly not the expertise.
To close this off, I have one question, and I'm actually going to steal this question from Anthony Pompliano, because I thought this was a cool question when I heard it. If you could wave a magic wand and maybe change one thing about the industry right now, what would that be, and why would you change it?
That's a great question. As a lawyer and how regulatorily focused, it would probably be to have a sensible regulatory framework. That's probably not an interesting answer to most people, but that's kind of like the lawyer side. But it'd be to like have a meaningful, open opportunity to create regulation that's sensible for crypto. I think there's there could be great strides and great benefits from that. To give a non-regulatory answer, I think what the industry really struggles with at a large scale is user interface and user experience. I think this happens at the retail level. I think this is especially true at the institutional level. Like we like to think of institutions as sophisticated and technically savvy and smart, and they are to an extent, but they don't understand this industry. They don't understand the technology. They are institutions, kind of by nature of what an institution is, are kind of like old-fashioned. They're kind of like set in their ways, and so reinventing themselves is a long and arduous process. And one of the difficulties and one of the obstacles to that in the industry is that the technology is not accessible. It doesn't make sense. It's not kind of immediately. You don't look at blockchain interface. You don't look at like a non-custodial wallet. Say like, yeah, I get that. Like that makes sense. And so if I could say if I could wave a magic wand and make those and kind of abstract away a lot of the kind of the crypto and the blockchain technology, and have a lot of these products, a lot of these services, a lot of these assets interface with retail users, interface with institutional users in a way that was very simplified and sensible, but still highly functional and secure. Like I think that would be one of the best things for the industry. People are working on this, but even if you just like spend an afternoon playing around in DeFi, like check out Compound, check out check out Yearn, check out Aave, check out any of these things. Like if you like really want to use it and interface with it, it's going to be kind of complicated and it's not going to make a lot of sense. And people are trying to abstract that away, but there's a lot of work to be done.
I love that answer. That was very good. Thank you so much, Joshua, for being here, taking your time, your whole entire evening to spend with us.
Thanks for having me. I enjoyed it. It's great.
We're so appreciative, and we're super excited about what you guys are doing. I'm actually also going to leave the Blockchain Capital link down here, but where can people follow you if they want to follow you directly?
Yeah, sure. I'll drop my Twitter handle in here. I'm semi-active on Twitter. I try to keep it light. But yeah, follow me on Twitter. Happy to always jump in a DM, answer questions, or engage live. You can find me on LinkedIn. LinkedIn's pretty, it gets pretty flooded, so I don't always kind of answer as quickly on that. I'm also on Telegram. Let's see. Just this. So yeah, feel free to hit me up there. But yeah, I love talking about this stuff, and always open. If I'm wrong about stuff, please tell me. Happy to. We have strong opinions, but they're loosely held. And I think if anyone feels like they understand exactly what's happening in this industry and exactly what's going to happen, they're God, or they're fooling themselves. So we try to be as humble as we can and be open to oversights and places where we've gotten things wrong. And my understanding of the industry is changing every day. So always happy to discuss.
Awesome. We really appreciate it. And I'll pass it on to Joe for our closing statements.
Yeah, thanks very much, Jabron, and special thanks to Josh for making the time, as you mentioned, this evening. Really appreciate all of his insights. There's some very positive and warm feedback. You're welcome back, Josh, by us and a few other folks in there. I don't know if that's whether they want to test your thesis and see if your crystal ball is working, but no, in all seriousness, a great presentation, a lot of good energy, a lot of great questions, and we definitely want to make sure you feel welcome again, and will join us perhaps, if not later this year, then maybe sometime early next year, and be great to see where we've been and where we're going from there.
Yeah, I'd love to. Hopefully next time in person. Love to come see how you guys live. We'll see what Corona has to say about that. But yeah, it's been great to be here tonight.
Yeah, absolutely. And a few more thank yous. Thank yous to Step2 Sleep for sponsoring the Zoom, and their link there is below. Any other information, anything else that folks would like to share with Josh? He's kind enough to leave his information there in the chat box. So we'll maybe hold off a few extra seconds for those that want to copy that down or backtrack and then do a copy paste into their contacts. One other note for our next meeting, it's in 2 weeks, 2 Mondays from now on the 24th. Chris Grishon from Coinstructive will be here, and he will be talking through blockchain forensics and talking through some of the private investigative avenues he's been pursuing to help victims recoup some of their funds by tracing things through blockchain and working with some various law firms. So that should be exciting, a little interactive demo. Hopefully folks can make it. We are looking to book some amazing speakers, no names at this point, but some pretty amazing speakers in the coming months. That said, if you know of anyone, any special project, any ideas of who you want to have speak, I don't know Satoshi personally, so maybe if we can lower the bar a little bit, but you have a good speaker nonetheless, please send those our way, myself, Jabron, any of the other organizers on the meetup page. We'd love to take those suggestions. And please, if you have not done so already, make sure you sign up for our newsletter, get signed up on our meetup page. We promise not to spam you. We're just going to keep you in the loop and invite you to amazing opportunities like today. So on behalf of Jabron, Brian, David, the rest of the team, thank you all for joining this.
Just give a round of applause to Joshua. If anybody unmute your.